So Treasury general accounts getting that liquidity just got dumped in the markets. Love that. Let's take a look at gold. Okay. I've done this TA on gold, which is beautiful. And I'll give you the play that we took on gold. Okay. Or what I'm thinking. So gold went through this very large reaccumulation range from these two vertical lines I have drawn out. Okay. So from March 2020, COVID nuke, gold pumped naturally because gold is basically a hedge against the current financial system. So if people are afraid about the current financial system, or they don't believe in it, or they don't believe in investments, etc., gold is a safe haven. Gold is a safe haven for capital because it's basically the oldest, longest standing source of wealth preservation. That basically will stand the test of time because it's always going to be there. It can't break down. It's just gold. It's gold. People value gold for centuries, so it'll keep being valued. Okay. So we went through this massive reaccumulation range, a couple of years, right? So from 2020 all the way through 2024. Okay. Then what happened? Gold started ripping. Look at how cleanly gold trades. We have fibs drawn out on here. So here's the bottom of the range, mid-range, top of the range. Very clear range. As soon as we break out of the range, where do we top out at? Perfectly. And start to reaccumulate. This is on the weekly, so start to reaccumulate here. 1.618. Perfect target. Boom. We break out again. Pump straight up. Boom. Right into where? Where do we go straight into? And basically come back and retest. 2.618. Perfect fib tag. We pump again. Straight up only. 3.618 is where we start to reject and reaccumulate. 3,200. Technical analysis doesn't work. No, of course it works. Clearly it works. Okay. So gold has hit all of its fibs beautifully, almost perfectly. Okay. If you go on the daily, we wicked up almost to the 4.2 fib. Okay. So what does this look like to you guys? Looks like a double top. Okay. Got stuffed here, pulled back, came back up, got stuffed again, pulled back down. Doesn't look like we're reclaiming this 3.618. So here's why this is important. This is a potential short. It's the Air Force coming to attack us because we gave too much alpha. Okay. This is a play that you can make on gold. So basically, it would make sense to short gold here because this looks like a double top. This thing has ran to the 3.618 fib, which is insane. I mean, that's a fucking insane rally to the 3.618, basically without stopping at all. Just quick little reaccumulations, then pump to the next level. Huge. Gold has been soaring. So here's why I think you can short it here. Double top, right at this fib level. We just lost the fib level. It's the first time that we actually, actually lost a fib. Because every other time we hit it, we just traded next to it and then above it. Never broke there. Broke here, but didn't lose it. Broke here. Looks like we're losing it now. So one of two things could happen. I would put my stop right above. I mean, you could put it right there if you really wanted to. Give you some room. I would put my stop loss on the short right at this candle. Because that would be a reclaim of this 3.618, and then it could start running again. But if you short it from here, you could easily have a target of this 2.618. And if you really think this shit is bearish, I mean, over a long enough time frame, maybe get that low. Down 21%. Nah, that'd be fucking greedy. That'd be greedy. But definitely down to this fib. Okay, take out this low right here. Right, in a bear market for gold. So this looks like a good play to me. So I'm just putting this out there because it would make sense that gold would be topped here if we see risk assets really actually fucking run over the next 6 to 9 months. It's just because how much further can gold really run? I mean, it could rip up to this 4.2 fib, but that's why you keep this tight stop loss. Like if it reclaims this fib right here, this 3.618, then yeah, you could run it back up to that high. And then I would look to short it up in here, right? And then get this move down. Whoops. Short it on a loss of that fib and then try to run it back down into here, right? But that's the play on gold. Okay, it just looks toppy. It looks topped. Okay, so there's a gold play for you. I like that. Otherwise, I mean, just ridiculous rally. So here's your range. This is how you look at these. You get this reaccumulation range. You start to see this play out over a couple of years. So you put fibs on it and you say, okay, I'm bullish on this asset. We have this 4-year range that's very clear mid-range. Interaction, 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 interaction. Very clear mid-range, very clear top of the range. See, 1, 2, 3, 4 tags, 5 tags. Very clear bottom of the range right here. 1, 2, 3. Okay. So then if you long anywhere at the low of this range or even at this mid-range, you print it on gold because then you hit your 1.618. You take a little bit of profit here. 2.618, second take profit zone. 3.618, take profit. And then if you really want to leave like 20%, 15% to ride, if you think it's still going to keep mooning, then you leave a moon bag. But you can long it all the way up. So gold was a fantastic play over the last couple of, last year or so. Yeah, year. It's been up only.